Hey people, I welcome you all to the fourth video in the series in which we are solving previous year questions from the chapter Accounting for Share Capital in order to master the questions that are asked in the board examination. So now we are into the last question in the forfeiture and reissue type. That is the questions in which they only ask you, expect you to pass the journal entries for forfeiture and reissue. We have taken up the 2021 compartment question papers question. AXN Limited forfeited 2,400 shares of 10 each for non-payment of final call of rupees 3 per share. Out of the forfeited shares, 800 shares were reissued at rupees 8 per share as fully paid up. So very straightforward question. They're given the number of shares forfeited. It's not a pro rata question. They're given the amount not called up. I'm sorry, not paid up. Everything has been directly given. There is one small twist, that is they expect us to find the profit on reissue. It's a partial reissue question, so they expect us to find the profit on reissue, which is easy for us as we have complete knowledge of the working note that has to be done in order to do that. Let's, without wasting much time, let's go ahead and solve the question. So it's in the books of AXN Limited journal. Now this question does not involve premium, so securities premium will not be there, and therefore the journal entry for forfeiture would be equity share capital account debit to share forfeiture to calls in arrears. Let me say delete the numbers. It's obviously going to be different for this question. Also delete the numbers from the working note. All right. So AXN Limited forfeited 2,400 shares of 10 each for the non-payment of final call. They say that the final call has not been paid. What does that mean? It means the final call has been made, but it has not been paid. If the final call has been made, the shares have been fully called up. If the shares have been fully called up, what would the equity share capital be debited with? The number of shares forfeited multiplied by the called up value per share, which is 2,400 multiplied by 10, which is 24,000. And what is the calls in arrears here? It is 3 rupees per share for the non-payment of final call. So only the final call has not been paid on 2,400 shares. So that is 24,000 into 3, which is 7,200. So what would be your share forfeiture amount? It will be the balancing figure of 16,800. Now these shares are reissued. Out of the forfeited shares, only 800 shares are reissued for rupees 8 per share as fully paid. So been reissued for rupees 8 per share as fully paid up. How many shares have been reissued? 800 shares into 8, 6,400. The amount received in the bank. They've been reissued as fully paid up. Fully paid up means what? Face value. So 800 into 10, 8,000. So what will be the discount given? It will be 8,000 minus 6,400, 1,600 on 800 shares. So per share it is 1,600 divided by 1,600 divided by 800, which is 2 rupees per share. Okay, that's done. Now, in order to pass a journal entry for transferring the profit on reissue to capital reserve, it's going to be difficult because it's a partial reissue for which we need the working note. So let's go ahead and do the working note. Profit on forfeiture per share is what total profit on forfeiture, which is 16,800 credited to the share forfeiture account while forfeiting, divided by the total number of shares forfeited. So 16,800 divided by 800 shares. 800 shares are forfeited, right? So 16,800 divided by 8. 16,800 divided by 800. Children, that was wrong, children. It's not 16,800 divided by 800 because 800 is the number of shares reissued. The number of shares forfeited is 2,400. I thought we were doing something wrong. It's not supposed to be 21. 16,800 divided by the number of shares reissued, which is 2,000. Number of shares forfeited. Profit on forfeiture per share is total profit on forfeiture, that is 16,800 divided by the total number of shares forfeited, 2,400. 16,800 divided by 2,400. What is the loss under issue? We have incurred a loss of 2 rupees per share because as the question states, The question says that 800 shares were reissued as at rupees 8 per share as fully paid. So 8 rupees, we have received 8 rupees and we are considering 10 rupees paid up. That means the loss on reissue is 2 rupees per share and the profit on reissue will be 5 rupees per share. We have reissued 800 shares and therefore the profit on forfeiture will be 800 into 3, 2000. Understood or not, my dear? So this we got to be careful when you're calculating the profit on forfeiture per share. You might sometimes, because of in a hurry, you might divide that profit on forfeiture amount by the number of shares reissued because that is the last number that is sitting there and sitting inside your head. So what I request you is you keep this in mind. Profit on forfeiture per share is total profit on forfeiture divided by number of shares forfeited. Understood or not? All right. So the next question is not exactly a forfeiture and reissue question, but it is a issue of shares for consideration other than cash question. The second subdivision of this 8-mark question is a issue of shares for consideration other than cash question. It's not difficult, it's something that we have learned, and so you should be able to do it. We should be able to do it. So let's go ahead and do that. Let me hide this real quick. Oh no, I just deleted it. I want to hide it. Yeah, I've hidden that. Now, in the books of Vanya Ltd, books of Vanya Ltd, journal. Vanya Ltd purchased a running business from Hardik Ltd. Hardik is getting a lot of heat nowadays, right? After having taken over the captaincy from Rohit. Yeah, anyway, let's not digress. Vanya Ltd purchased a running business from Hardik Ltd for a sum of rupees 18 lakhs. The payment of 10 lakh was made by issue of equity shares of 10 each and balanced by a check. The assets and liabilities acquired from Hardik Ltd consisted of the following. So they're given the total purchase consideration, which is 18 lakh. 10 lakh was given by check by issue of equity shares of rupees 10 each and balance by check. Now we got to account for this. Understood? Let's go ahead and do that. There are only, as I mentioned before in class and in the concept problem videos that I've taught you in that playlist, only two journal entries when it comes to issue of shares for consideration other than cash. One is taking over the assets and liabilities, and the other is making the paying the purchase consideration. So let's first take over the assets and liabilities. They are taking over machinery account for an amount of 9 lakh. Sorry, 9 lakh. Yeah. Land and building account for rupees 13,50,000. Furniture account for rupees 8,50,000. Now, while passing this journal entry, I always request you guys to leave one line because sometimes you might have to debit goodwill, which will be evident only in the later stages. So we'll just leave one line for safety and then pass the journal entry. And we're taking over sundry creditors for rupees 3 lakh. And the purchase consideration payable to Hardik Ltd, which is also a liability, as it is increasing, it will be credited. Hardik Ltd is 18 lakhs. Well, the net assets taken over here is what? Net assets taken over is sum of assets taken over minus sum of liabilities taken over. The net assets taken over here is 31 lakh minus 3 lakh, 28 lakhs. But the purchase consideration is only 18 lakhs. Purchase consideration is only 18 lakh, which means we're taking over assets of 28 lakhs, but we are only paying 18 lakhs, which is a profit that has to be credited to capital reserve. Of 10 lakhs. Understood? What if the purchase consideration was more and the net assets was less? Then it will be a loss and that will be debited to goodwill account. That is why I requested you to leave one line over there. In case goodwill was the case, if it was a case of goodwill, then we'll debit goodwill account in that line. Understood or not? Assets and liabilities taken over. All right, what is the next transaction? It is settling the purchase consideration. So let's go ahead and do that. You have Hardik Limited will be debited as that we're going to pay Hardik Limited. That liability is going to is decreasing in this transaction, and therefore it's debited. Hardik will be debited for the agreed purchase consideration of 18 lakhs. And 2, we're paying a certain amount through check. What amount is that? That we got to find out. And we're paying 10 lakh rupees as equity shares. So it is equity share capital account credit for 10 lakh. If you're paying 10 lakh through equity shares and remaining by check, so how much would be the remaining? You're paying 18 lakhs in total. So that will be 8 lakh. Purchase consideration settle. All right, my dear children. So with this, we have completed this question also. You take care of the assets and liabilities and you settle the purchase consideration with that the problems over. So simple, my dear children. So I hope you guys are now understanding how to solve the forfeiture and reissue problems without any hiccups. The next thing that we have to tackle is the pro rata forfeiture and reissue question that is asked. They give the entire story of what happened during the issue, and there'll be some person who would not have paid, and then their shares would have been forfeited and then reissued. But you'll have to start accounting from receiving application. Those kinds of questions that is usually given as an internal choice, but it is not a necessity that it should be given as an internal choice. But in this, for instance, in this attempt, you see, usually 2 forfeiture reissue questions are given together as subdivisions. But here, one issue of shares for consideration other than cash, and another forfeiture reissue question has been in compartment 2021, 8-mark question. Understood? So anything is possible. So it's important that we learn that also correctly. Okay. So that we'll be doing in the upcoming videos. And for now, you people take care, have fun, and bye.